Hey, welcome to another episode of the Junior Doctor Hub. My name is Jade, and today we're going to talk about how to understand your tax return. Each year you lodge your tax return with the ATO either by yourself or through your accountant. But do you understand your tax return? In today's episode, I will explain how to read your tax return. A tax return is a form that tells the ATO how much money you have earned for the year and expenses you have paid in relation to earning that income, commonly known as deductions. The ATO uses this information to determine whether you have paid enough tax throughout the year and any applicable tax offsets. When you receive the completed tax return from your accountant, the first page of your tax return is your estimated income tax position for the year. That is the amount of tax payable or tax refundable. The second page contains your personal information such as date of birth, bank account details, and your address. Always make sure your bank details on this page are correct, especially if you are expecting a tax refund. The next page is the income part of the tax return. Your income such as wages, bank interest, dividend income, business income, and rental property income will be included here. If you have sold shares or an investment property, the gain or loss you make on this is a capital gain or loss. The capital gains will be included in your taxable income, while a capital loss will be carried forward to offset any capital gains in future years. The total income is the sum of all your income earned during the year. The next page of your tax return is the deductions. Examples of deductions you may be able to claim includes accounting fees, work-related car expenses, work-related travel expenses, work-related self-education expenses, donations, professional memberships and subscriptions, personal superannuation contribution, interest charged by the ATO, income protection insurance. After your total deductions has been applied against your total income, the net income is your taxable income. It is on this amount that your tax will be calculated and payable. Your private health insurance details will then be included, and a 2% Medicare levy will be charged on your taxable income. If you do not have private health insurance and earn about the income threshold, you will also have to pay Medicare levy surcharge of 1% on your taxable income. Your eligibility for several tax offsets and benefits are determined by several income tests. Those tests may be different for different offsets. Tax offsets and benefits can reduce the amount of the tax you pay. You are also required to declare your spouse details and their income in your personal tax return, as the ATO uses your family income to determine whether you are entitled to a rebate for your private health insurance, payment of Medicare levy surcharge, and eligibility for childcare subsidy. This is discussed in details in our Junior Doctor Hub. Basically, total income minus total deductions is your taxable income, and gross tax is calculated on your taxable income. The tax offset and the tax you have already paid during the year reduces your gross tax bill. However, the Medicare levy and potentially Medicare surcharge are added to derive your total tax payable or refundable for the year. Thank you very much for watching this video. If you want to contact us, you can find the details in our Junior Doctor Hub. Thank you. Bye.